Welcome to today's market report. European stock markets largely weakened on Monday, weighed by news of fresh lockdowns in the region and uncertainty over the US election, overshadowing strong economic data from China. The DAX in Germany traded 0.% lower at 11,500. CAC fell 0.2%, trading at 4,600. FTSE dropped 0.1%, trading at 5,600. The UK became the latest European country to re-enter lockdown over the weekend, instituting a one-month stay-at-home policy for all of England to start on Thursday, with the exception of schools, universities and essential stores, as the number of COVID-19 cases affecting its population surpassed 1 million. Germany and France imposed similar partial shutdowns last week as European leaders desperately seek to halt the surge in the virus before the holiday season at the end of the year. However, these new measures risk sending the region's economy back into recession, just as a recovery looked in sight. There has been some good news on Monday, with data from China showing factory activity expanded at its fastest pace in a decade. The Caixin Manufacturing Purchasing Managers Index for October rose to 53.6 as the second largest economy in the world recovered strongly from its virus-induced slowdown. The Spanish and French manufacturing PMIs also showed an improvement. That said, trading ranges are likely to be tight on Monday as the US presidential election draws near. Democrat Joe Biden still maintains a comfortable lead over incumbent President Donald Trump in the national polls, but the polling in key swing states tends to be a lot closer. In corporate news, Ocado stock rose 6.6% after the retailer lifted its guidance for the year and announced two tech acquisitions moving beyond the grocery sector. On the flip side, Ryanair stock fell 2.5% after the budget airline revealed it carried 80% fewer passengers over the first half of its financial year, while posting a loss for the period. Rival easyJet stock fell 6.63%, with the industry hit hard by the new lockdowns in the region. CEO Johan Lundgren stated over the weekend that the airline was considering options to bolster its finances. Oil prices slumped on Monday, with more lockdowns in Europe adding to fears that global demand will be severely hit by the second wave of coronavirus cases hitting the northern hemisphere. Crude futures traded 3.8% lower at $34.42 a barrel. Brent contract fell 3% to $36.78 per barrel, hitting their lowest level since May. Gold futures rose 0.1% to $1,882.55 per ounce. On the FX front, GBP USD plummeted to near one-month lows, closer to mid-128s. The pair opened with a modest bearish gap on the first day of a new trading week in reaction to the imposition of second nationwide lockdown in the UK. Given the alarming pace of growth in new COVID-19 cases in the UK, British Prime Minister Boris Johnson on Saturday announced a lockdown across England until 2nd of December. A senior cabinet member said on Sunday that the lockdown could be extended, which in turn took its toll on the British pound. Meanwhile, growing market worries that renewed lockdown measures in Western countries could prove detrimental for the global economic recovery continued, benefiting the US dollar's relative safe haven status. Developments surrounding the coronavirus saga largely overshadowed the latest optimism over a soft Brexit. It is worth reporting that EU and British Brexit negotiators will continue talks in Brussels on Monday and until around midweek. The continuation of intensive talks is now seen as a sign that both sides are still pushing to avoid a damaging breakdown in trade and seal a new partnership agreement before the end of UK's transition period at the end of this year. The GBP bulls, however, seemed rather unimpressed, instead preferred to stay on the sidelines and wait for fresh Brexit updates. Apart from the mentioned factors, possibilities of some short-term trading stops being triggered below last week's swing lows around the 128.80 region further seemed to have aggravated the downward pressure. Some follow-through selling below mid-128s will be seen as a fresh trigger for bearish traders and pave the way for additional weakness for the GBP-USD pair. Euro-dollar faces further downside, but it is unlikely to test the key support around 115.80. Markets fears in the US a protracted process could result in a contested election and a constitutional crisis. This pushed the US dollar higher at 94.142 after climbing 1.2% over the last week, its largest weekly percentage rise since late September. This is today's market news. Thanks for listening. We'll see you next time.